Melody, welcome back to Face. Great to see you. And a lot of the things that you were talking about prior to the election, I follow your stream and some of the things you've done with Danielle. Um, Fill us in with where you think the state of play is in real estate in light of the fires in California following the floods in Florida. Are tariffs going to affect construction because we do import a lot of lumber, and will a trade war? What kind of effect will that have on developers even wanting to build anymore?
Yeah. Well, thank you, Dale, for having me. It's a pleasure to
Great
be
to have you
back, and
back.
it's good to see you. So there's a lot going on, right? We knew that
Yeah.
this was not going to be a boring year. So let me start with kind of December sales, which were actually a much stronger than anyone really anticipated. And when you look under the covers, they're stronger even still, because I track about 84 markets. And we had seen sales kind of slow down after that strong October. And then in December, they accelerated again, even in the West. And so I think what is happening between the fires and the hurricanes and all the speculation that we've had in the market, I think the landlord class is coming to terms with the fact that it's not going to be fun to be a landlord anymore. As well, they can't cash flow. And so when you look at places like Los Angeles, they had a very low owner occupancy, meaning and home ownership rate, meaning that there was a lot of people that rented there. On social media, people say, well, not in the Palisades. Actually, that's untrue. Even in the
Really?
Palisades, oh, yeah, a lot of
Well,
people.
yeah, but what's rent there? 5K a month
Oh,
in the
100%.
Palace,
Yeah, it's
right?
it's
Yeah,
ridiculous. But I
yeah.
think that people don't understand is that a lot of the homes that were lost were actually second homes, which is going to make things very different than if it was just all primary homes. Same actually in with Helene, a lot of that was primary homes, but also a lot of second home ownership, short term rental ownership. And so, I think what everybody is realizing as those taxes and insurance increase is that they don't want to be a landlord anymore. And if they do, maybe they only want one property instead of the 10 that their bank told them to take out leverage for, because that's what these non-bank lenders would do. They come in and say, I want to buy one short-term rental. And they say, why buy one when you can buy 10? And I saw that over and over again. And so I think what's happening is that motivation that we saw at the end of last summer. And I talked about that motivation meaning, hey, I probably need to sell this property in the next couple years. It's,
Oh, yeah.
that kind of thing. Let me just go ahead and do that because this just doesn't make a lot of sense. What I'm seeing, I just paid my tax bill. But what I think you're actually starting to witness is motivation turning to distress. So I still oversee some mortgage books and I do delinquency reviews. And you can see comments of people saying, I'm trying to sell. I'm trying to sell. I'm behind in my mortgage payments. I'm trying to sell. It's been sitting on the market since September. And so,
Wow.
yeah. And this is just beginning because I think everyone thinks that there's so many government workouts out there, but the fact is people have taken the limit of those government workouts because during COVID they
Yeah.
took the limit of those, and so now as we have layoffs and bankruptcies increase, people are becoming under distress. And I think last year in 2024 everybody just put pause on everything because they didn't know, oh my gosh, what is going to happen in the
The
election.
election.
And
Yeah.
then we had rate cut hopium all year long. Remember, it started in
Yeah.
December. It kind of it died off after the end of the spring, and then it started, accelerating again. And then rates were cut, and the mortgage rates didn't go down, and everybody was like, "Wait, what happened?"
Yes.
and
Yeah.
and so I think we lived on some hope or hopium last year, and now
Yeah.
everybody has woken up to 2025, looked around and said, "Okay, nothing's coming to save me. I'm going to have to take action." And we're actually seeing non-seasonally inventory start to accelerate again. Typically, everybody pulls their listings for the holidays. They don't really get back out there until, late February, March, unless you're in Florida and Arizona that are the snowbird states, which
Right.
have already been, inventory is climbing in Florida, hitting all time highs there. but you're starting to see it everywhere else too. I think a lot of people thought those refugees from Los Angeles were going to move to their, I mean, I've heard it in Nashville, Denver, all over the place. Again, everybody thought the Californians and the New Yorkers during COVID were all going to move to their town, and they built that way. And so, moving to tariffs really quickly, we're oversupplied. And this is something that people don't understand because NAR has pushed a narrative out there, National Association of Realtors, that we are undersupplied. They started that nonsense back in 2017. In
We
reality,
still hear it, Melody.
I know it's still going, but we just had two studies come out, the Cato Institute, Taylor and Francis, both saying, challenging the housing shortage narrative. Taylor and Francis saying, we've built 3.3 million more structures than we've have households. And we have 15 million vacant properties. The boomers are actually 15.6 million of them will pass on between 2025 and 2035. They own the majority of the homes. So there are just so many.
Yeah.
Plus, we've built like
Houses
crazy.
houses don't die,
No,
just the
they don't.
people that lived in them.
That's right. But you might have to, you might have to do some repairs, but they don't die. And we've got
Right.
9.5 months of supply from the builders, non-seasonally adjusted. Okay, 9.5 months of supply. And by the
Wow.
way, Dale, that is not what's out there. It is way
Yeah.
worse than that. As you know, I've traveled all over the country. I've seen it for myself, and it's 3 times as much as that. I promise you. As well as we have single family rental at, I track Zelman, that occupancy is at one of the low at their survey low right now, and multifamily occupancy is also going lower. Vacancy is up. So there's a lot happening for housing. And I think that so the builders came out. I don't know if you saw it. They sent a letter to the president and they said, please, sir, please help us. We can't, these tariffs are going to kill us. And, what I saw on social media is people don't care. The builders have no friends. And so I got to be honest with you, I'm a little surprised that a special interest group has been put on the outs like this because not only
Yeah.
do they have the
It's a
headwind of
big
the
lobby.
tariffs, yeah, the tariffs and labor. I mean, social
Oh
media was
yeah.
all abuzz with empty job sites for the past week. And so builders have a lot of headwinds coming their way, and they have a ton of inventory they're going to have to offload into the market. So things are getting very interesting. But I think believe it or not, I just came out with my forecast. I think we're actually going to have a bit of a stronger year in sales volume than we did in 23 and 24, just a little bit, about 2% increase. But what that means is actual price discovery, Dale. And I think we are
Okay.
absolutely going to see, if we're looking at the NAR series or National Association of Realtors, I think we're going to see about a 9% price decline this year. And I know everyone's going to call me crazy, and that's just fine. So
Oh,
happy Monday on this
happy
crazy
Monday.
Monday.
Yeah, it's a gap fest. Every chart
Yeah.
has a huge gap in it. So, let me ask you, people that have mortgages at 3% for years before yields went up, um, the argument is, why would they ever sell their house? They can't live cheaper anywhere, renting, buying another property. I guess they could cash out, but why would they ever move? And isn't that a big part of supply?
Yeah, so it's the ones that don't have a choice. Dell is death,
Okay.
divorce, default, and the DOD, who moves a whole bunch of people every year. And so over the holidays, I'd had a few people contact me over the past year about default situations because everybody knows I used to run default, just wanted my opinion. Over the holidays, I had several people. So I'll give you an example. A person, apparently, this a child was supposed to be taking care of a property, had power of attorney. They took out a loan. They got into a default situation. This was supposed to be shared between, three
Yeah.
siblings. Two of the siblings were
Aren't
going,
aren't some families wonderful
oh,
when it
yeah.
comes to money?
But Dale, it's like everybody. I mean,
Yeah.
this is multiple cases where the child that was supposed to be taking care of business for, the estate
Right.
totally did the wrong thing. And so, what'll happen, they're either going to sell that property. I'm helping others sell their parents' homes and properties, or they're going to sell their property and move into that property to retire. And so
Yeah.
there are reasons that are going to, people will not have a choice. Also, the work from home mandates. You're now hearing, I mean, people are coming back to work and they moved out to the exurbs and they can't actually afford that hour and a half commute anymore. It's killing them. And so people,
Done it.
it's
Yeah.
where people don't have a choice.
Yeah. Okay. So, what about policy? Um, I know that President Trump wants Powell to move, and Powell pushed back, and I think we're going to need some. The other part of the equation would be employment weakening, would be maybe the nail in the coffin. Is that
Absolutely.
all right? So, they're saying the employment's strong. You're looking for a decent year as far as volume of sales, but it's because people are going to start not believing their estimates
That's right.
anymore, right? Okay.
And they have to move. Yeah.
Okay. Anything special about what's happening in? I read how all the seniors are fleeing Florida. You're reading about 50% price cuts in Florida. Um, is it, even though there's probably pretty good deals, with what it not being able to insure homes being a new factor in real estate, between California and Florida and other flood zones and fire zones? Um, what's going to happen to California homeowners with getting fire insurance now?
Yeah, they're not going to be able to get it. I mean,
Yeah.
in a fair plan, which is kind of the state back plan, there does not look like it's going to be able to cover these losses. And so I think insurance as we know it, Dell, is about to change. And because you just, all over the place, and it's even in the Midwest because they have hailstorms and places you wouldn't even expect. So it's just not the coastal cities. But honestly, Florida right now, even with the deals, because of the insurance, I would want to see what is their answer to that.
Yeah.
And the same in Los Angeles. What is the answer? And until then, I would not be, trying to. In Fort Myers, we saw like after the hurricanes, everybody thought the investors would swarm. You've got inventory at the highest levels there, beachfront properties for sale because people can't insure them and it just doesn't make sense. And so I would wait until there's some sort of solution for what's happening in these markets.
Okay. Well, when you and I talked and I said, well, how could we take advantage of this bear market in real estate? You brought up Airbnb,
Right.
which did collapse afterwards, and you talked about the housing stocks. They were at the top, and they led the decline in the market, and they're really not recovering. Even when the market rallies, they don't rally. So, could there be any big banks to fade? Would Who would get hurt most in this? Could it be B of A with their long duration paper, or is there something on the public market, mortgage companies that are going to get in trouble that are nice specs on the short side?
So, yeah, the banks are going to be in trouble, but that's, I think, going to be down the line. I mean, they're a
Yeah,
mess no matter what
yeah,
they say. But the non banks, Dale, have no idea what they're in for. So, your Mr. Coopers, your Penny Macs, your freedoms, they are about to experience pain that they have never and it's already happening. I
yeah.
still oversee these books, and so I see what's going on at the mortgage servicers, and they are dying under this volume from all of these disasters because you would not believe what you have to do, Dale, when something like this happens as a mortgage servicer. You have to go out and inspect all those properties. You have to take all these calls. You have to do things for all of the agencies, the GSEs, et cetera. And so the non-banks are about to get crushed. It is going to take time. So,
Yeah.
and there's going to be politics involved, but I honestly believe watch those, look at their borrowings. That will tell you everything about them, when they're due, when they're
Do
going
you
to
have
have to
any stocks? Do you have any stock symbols on those?
Coop is Mr. Cooper is COOP. I
All
think
right.
Penny Mac, I forget what they are.
I'll look it up.
Yeah, but
All
I'll
right.
send you a list after this,
All right.
Dale, of
Okay.
all of them. I mean, Rocket, UW, all of them are about to just experience something they are not prepared for. And if rates do go down, let's say we have some sort of event and we have, that
Yeah.
old
Bonds
flight to
rally.
safety,
Yeah.
their servicing asset is going to get cremated. They've been going along just fine because when rates rise, they can write up the value of that servicing asset because it's all about the prepay speeds and thinking that they won't
Yeah.
prepay in time. And so, if rates go down at all, as well as they aren't having the origination to cover over these expenses and servicing because of default and these disasters, then they are going to get cremated. So calling that, it would be a really good when that's going to happen. But I'll
Oh,
send you
yeah.
some additional
Okay.
companies and
It's
email. Yeah.
interesting. I've looked at a few long-term counts on the TLT, and the one that appeals to me is maybe one more low in TLT and then a move to 120. So if we're, I mean, that's a huge bond rally. So
Right.
that, those would be great shorting candidates. And, I remember something from our first interview. You said the video was a fraud. And do you recall that? All
Oh,
right.
yeah.
So, I caught Nvidia a few times. In fact, I was there last Monday. It feels like a month ago. But why did you say that? And what are we going to find out that's starting
Oh.
maybe to be reflected in the stock price?
Yeah, so I would encourage everyone to check out Nobody's Specials deep dive on NVIDIA, my buddy Jack. So it really goes around core weave, these orders, this what people are calling the round tripping, this booking of revenue they don't have, but based on orders of chips that will never be delivered. I mean, it's just there is so much there.
Wow.
And it is.
How come no one talks about it?
They do. It just doesn't get on mainstream. I mean, you can
Yeah.
find these core weave stories all over the place, and
Okay.
everybody knows. Go back and look at their. They got fined, banned. Now they're all these same crooks are, at the company. Go. I mean, check out
Okay.
Jack. Nobody special on YouTube. He does a great deep dive into this. But yeah, it's not kosher, guys, at all.
All right. Well, I tell you what, it was great getting an update from you. Anything else that we should be watching for with, the red wave, anything on the political side? Even President Trump believes there's a housing shortage and wants to do something about it. Do you think he really believes there is one?
I don't. I actually don't. I
Okay.
think Gordon went to FHA and said, "Bill, Bill, Bill." But in reality, these two articles, one from the Cato Institute, which is libertarian, and then another from Taylor and Francis, which seems to be backed from the tech sector, all calling into question the housing shortage narrative. So I think that was performance until they could change the narrative, to be honest. So,
Okay. Well, it sure did not help Kamala Harris with her plan to we talked about this before, but you know what?
yeah,
What you're doing right now can save people's asses, and it
that's
would have
right.
been if they listened to you sooner. But it reminds me of a guy during after the Y2K bubble. No, the dot-com bubble busted, and he was long all these internet stocks, and they started going down. And he said, "Well, I don't want to sell them because I'll have tax consequences." And then he ended up not having tax problems because he ended up with losses. So it's better to, if you have a gain, to take the tax hit than watch it evaporate. Is the
That's right.
lesson, right?
Yeah,
All right.
absolutely.
All right. So follow Melody. And I know everyone out there got caught up in the hype in real estate. And what would you say to people that look at this as hopeful, that do not own a home? They're being squeezed. I really cannot shed any tears for the snidely whiplashes out there that are, not enjoying being a landlord because, I've been tied to the tracks before, living in North County, California.
Tied to the tracks.
Anyway,
Yeah.
so
Yeah, there's
um,
hope is what I would say, Dale. There's
yeah,
hope and just, try get rid of that debt, stop spending on Starbucks, save your
yeah,
money. There is hope out
okay,
there. I promise you.
okay, and be patient, like
Be
waiting for
patient.
trades.
That's
So I
right.
mean, you probably have to wait a couple years to let the dust settle, right?
That's right. Unless you're very aggressive and good at negotiating, because there are going to be some deals in certain areas, but follow me, get the free version of my Substack.
I just
I
posted it. Everyone that's here, I posted it. That's me. That's her Substack right there. And what's your X handle again? I can't
It's M
remember.
it's M3_Melody, Melody.
Oh,
Yes.
yeah, see, it shouldn't be that tough. Anyway, Melody, Happy New Year. I hope
Happy New Year.
I hope this is a great year for you, and that people give you even more recognition than you've gotten currently. And I know you're going to help a lot of people, which is beautiful.
Well, thank you, Dale, and good luck to everybody out there today. This is going to be one crazy,
Uh,
crazy year. So
you
thanks,
know,
everybody.
the difference between pros and amateurs are pros know how to lose, so they have
That's
money left to be right with, and that's true in real estate and in any investment field. Manage your risk. So,
that's right.
with that being said, thanks so much, Melody. Great seeing you.
You too.
Great smile, and I'll talk to you in the spring.
Yep. See you again next
Yeah,
time.
yeah. Okay,
All
Melody.
right.
Melody
Bye.
Wright, everybody.
Bye,
Watch
everybody.
this recording again. They're thanking you, Melody. All right, guys. So, did you like her? I'm telling you, there's a lady that is really on top of things. I forgot, Scott. Yeah. Anyway, but you could find her, and you could probably email her about that. Okay. And if you haven't yet, spend $1 and get into the room. This is going to be a great week to trade. We have either gaps to fill or accelerating moves. Either way, they're ups. Okay. Don't just count your pips, count your blessings, everybody. Be back for Turnaround Tuesday with you tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.